Good day everyone, this is your European Open briefing for Thursday 11th August. My name is Michael Frentiades and I'm the Chief Economist here at XM.com, and these are the key points you should know about today. The RBNZ, Reserve Bank of New Zealand, cuts rates to 2%, but the Kiwi rallies before some profit taking, the New Zealand dollar. The US dollar, on the other hand, is looking rather steady today. It's not moving much, making some gains against some European currencies, but not so much against the yen, and definitely not as much against the antipodians, the Australian and New Zealand dollars. And today is going to be a quiet data calendar before tomorrow's US retail sales, also Australian retail sales tomorrow, so we'll have a look at that. First of all, this is a chart from the Reserve Bank of New Zealand website. You see the latest rate cutting campaign from around 3.5%. Now it's down to 2%. Just be aware that interest rates were cut 4 times last year, so 4 quarter point cuts last year for New Zealand, and this was the second rate cut in New Zealand this year, taking the interest rate from 2.5% to 2% in total. So the exchange rate has been quite volatile, but if you see for the past couple of let's say 2 days and a half, it has been gaining, and following the cuts, the New Zealand dollar rose to above 73 cents against the US dollar, which was a 1-year high. Now the Aussie is also strong. It is trading above 77 US cents, for example. And why have both these currencies been strong lately? First of all, US dollar weakness has been one factor. The second is high yield plays. So we have this rush for grabbing yield. We have all these negative interest rates or near zero interest rates, it's very low to zero around the world. So maybe the Australian and New Zealand dollars are seen as very attractive in such an environment because they are actually yielding something positive. I mean, you actually get an interest back when you hold your money in Australian and New Zealand dollars. Of course, knowing this, the Reserve Bank of Australia, Reserve Bank of New Zealand are trying to cut interest rates fairly quickly. So this is an interesting situation. Also, I think boosting the two currencies is risk appetite. We have positive risk appetite. Things are not so bad in the world. The economies are chugging along, so these are not bad currencies to hold overall. Now the US dollar, as you can see from yesterday, the dollar index dropped a bit below 195.5. Now it's around 95.74. So it has recovered a little bit, but nothing to write home about. We have seen some gains against the euro, against the pound. Definitely the pound has been very weak. We had some weak housing data today from RICS, Royal Institute of Chartered Surveyors, saying that the housing market in the UK is not doing very well. Now, basically, the dollar and dollar traders are waiting for retail sales numbers tomorrow. We have jobless claims, weekly jobless claims today, and we have the Yellen speech in a couple of weeks' time. Already traders are starting to wait for that. In other market, we see the volatility in gold. We see what we talked about, that the dollar recovered a little bit, so that pushed the gold lower. From 1357 it came back to 1345, but overall maybe thin markets are pushing prices around. There was some pressure on Wall Street. It was the S&P 500 was around 0.3% down yesterday. Oil also fell to around $41.3, and government bond yields remain fairly low. So this is something for the environment. Now, as we said, the Rick's housing survey was a little bit worse than expected. Expected at 6, coming in at 5. Last month, in June, it was around. That was revised down to 15 from 16. Keep in mind it's a holiday in Japan today, so that is slowing things down even more. And we have, of course, jobless claims in the US expected around 265,000. And as we said earlier, we are expecting retail sales from Australia later on Friday, during Friday's trading, or late Thursday if your time zone is Greenwich Mean Time, and the retail sales tomorrow out of the US. So that's all from me today. Thank you very much for watching and have a great day.